if you add ETH to the portfolio and you rebalance periodically, historically you get higher returns, similar volatility, so higher risk-adjusted returns, and a lower maximum drawdown. But when I look at what I expect from a flow perspective, and then what you referenced from a supply of ETH perspective, it's hard to put those two numbers together and not arrive at a new all-time high. And if I had to guess, I'd suspect that we get to it by the end of this year.
Matt highlights two major tailwinds that he believes are underappreciated. First, the removal of regulatory uncertainties around Ethereum has provided a significant boost. The acceptance of Ethereum as a commodity and its inclusion in funds by major financial institutions like BlackRock demonstrate its growing legitimacy. Second, the recent upgrade to Ethereum's network has solved its scalability issues, which plagued the last bull market. This upgrade, coupled with regulatory clarity and the introduction of Ethereum ETF, positions Ethereum for substantial growth. Matt predicts that Ethereum will reach new all-time highs in the long term. Matt stresses the importance of including both Bitcoin and Ethereum in a diversified investment portfolio. He explains that these two assets are not perfectly correlated and have different use cases. Bitcoin is often seen as digital gold, while Ethereum serves as a platform for tokenization, stablecoins, and decentralized finance. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
But when I look at what I expect from a flow perspective, and then what you referenced from a supply of ETH perspective, it's hard to put those two numbers together and not arrive at a new all-time high. And if I had to guess, I'd suspect that we get to it by the end of this year. But we'll have to see how that unfolds. I would add just two more things on ETH, which may be valuable. Even if you remove the ETF from the equation, there are two huge tailwinds in ETH right now, which I think people aren't thinking about. One is that we've removed a great deal of regulatory confusion around ETH, ETFs, and with just general acceptance of its role as a commodity. And as an expression of that, you can see that BlackRock built a fund on Ethereum, which holds hundreds of millions of dollars in assets. And I think, so removing the regulatory cloud, I think, is a massive tailwind. And then you have the whole reason I was optimistic on ETH, at the beginning of last year, before we were even thinking about ETFs, which is you have the Dent upgrade, which has solved the scalability problem. And I think that problem was what killed the last bull market, even before FTX sort of drove a dagger in. I think fees on ETH spiking to $200 and throughput being totally jammed killed that market. And I don't think we've harvested the dividends of the Dent upgrade at all. And I think that we will. So when that upgrade and regulatory clarity in an ETF, then yeah, I think we get to new all-time highs. Over the long term, that's what you see. If you add ETH to the portfolio and you rebalance periodically, like once a year or once a quarter, to reweight those assets, historically you get higher returns, similar volatility, so higher risk-adjusted returns, and a lower maximum drawdown, which is the measure of like the most your portfolio is worth to the least it's worth at the bottom of a trough. And it's an important statistic because you feel that in your gut, right? When your portfolio falls 25%. So yeah, the thing about Bitcoin and ETH is that they're not perfectly correlated, right? They have different uses. They respond differently in the market. There's Bitcoin season and ETH season. And when you put different assets into a portfolio, you get better risk-adjusted returns. And that's what we see if you look over any full cycle in crypto. Obviously, if you do a short-term look, you can find times where it's better to be Bitcoin only, or it's times to better be ETH only, because there are periods where Bitcoin outperforms and period where ETH outperforms. And if you know those in advance, God bless you. But if you want to look over a full portfolio cycle, the data shows, yeah, you want to smash them together, and you'll get a better outcome. Well, I think if we get those numbers, we should be pleased, right? The framing is to remember that Ethereum itself is only about 25% of the combined Bitcoin and Ethereum market. So what we're talking about is more or less a market cap weighted reflection in flows. And so therefore, what matters to people is price. And while there are lots of factors that will influence how flows turn into price, size is the biggest one. So they should be, if they hit these numbers that James and I are talking about, it should be seen as a historic success. I mean, again, these would be the second most successful ETFs of all time. That's pretty good. I think some people are worried because Ethereum futures ETFs sort of sputtered out of the gate. Bitcoin futures ETFs, which launched a few years ago, did well. Ethereum futures ETFs did relatively poorly, but they really launched into the teeth of a bear market. And I think the buyer of a futures ETF is different than a buyer of an Ethereum ETF. My view is pretty simple, which is everywhere you look, if investors have a choice to buy Bitcoin and Ethereum, they end up buying both. In Europe, there are Bitcoin and Ethereum ETFs. The market's about 75-25. In Canada, there are Bitcoin and Ethereum ETFs. The market's about 75 and 25. On centralized and decentralized exchanges, you can buy Bitcoin and you can buy Ethereum, and the market's about 75 and 25. Everywhere you look, this is the ratio that people see. Many people want Bitcoin, some people want Ethereum. I think that's what we're going to see, and I think they'll be hugely successful. Now, the first few days could be weird because you have ETH, this grayscale product, which outflows, and the first few days of the Bitcoin ETFs were weird. We don't remember this, but Bitcoin's price went from 50 to 40, and everyone assumed Bitcoin ETFs are a dud, they're not going anywhere, and then guess what? They were the most successful of all time, and the price ripped to a new all-time high. So I wouldn't worry if things are fun after a few weeks. The ETH ETFs are going to be a success. We talk to advisors every day. They're interested in Ethereum. They have been for years. They love ETFs. If we're able to put those together, there's going to be interest. So yeah, that's our view. We think it's going to be successful.
Some investors worry that the introduction of Ethereum ETF might lead to a shift in allocations away from Bitcoin. Matt acknowledges this possibility, but believes it will be offset by new money entering the space. He shares an anecdote about a large advisory network that was hesitant to invest solely in Bitcoin ETF due to a lack of diversification, but showed strong interest in a combined Bitcoin and Ethereum ETF. Matt argues that institutional investors generally seek diversified exposure to crypto assets, similar to how they approach stocks and bonds. They are likely to adopt a market cap-weighted approach, investing in both Bitcoin and Ethereum to achieve broad exposure to the cryptocurrency market.
On the margins, the answer is yes, but you're not going to notice because there's so much new money that's going to come into this space. So there will be a few people who have already made a 5% allocation to Bitcoin, and now they're going to change it to be 3.5 Bitcoin and 1.5 ETH. That'll happen on the margins, but it's going to be just papered over by the amount of people starting new allocations or who only dipped their toes in the water on Bitcoin and now are going to add ETH. I've told this story before, but I was meeting with the CEO of a $100+ billion advisory network. So he oversees advisors who manage well north of $100 billion. And he didn't want to invest in just Bitcoin ETFs because it's not diversified. But if he sees ETH ETFs launch, he thinks packaging them together and having a small allocation is beneficial for his firm. So I think it's going to be more of that, but there'll be some competition around the edges, just like there is in traditional crypto, right? There are competition between those assets, and then there are many of us who own both and are happy with that. I think it's a more complex narrative, but I don't complex. I think the most institutional investors see Bitcoin as digital gold and Ethereum as the platform for tokenization, stablecoins, and DeFi. And I know that saying that offends the Ethereum community because ETH has monetary aspects and is ultrasound money, and that's a viable narrative that I agree with in part. But Wall Street's not going to hear that. They're going to A, be this, and they're going to put Bitcoin in this monetary space and ETH in this platform for tokenization, stablecoins, and DeFi space. And I think that's fine, because again, I think they're most likely to pick both. And they just want to know that ETH has these valuable use cases. And I think that's the narrative that's going to emerge. I think the challenge you're pointing out is that the true ETH narrative is very complex and multi-part, whereas the true Bitcoin narrative is actually simpler in my mind. But Wall Street's going to simplify this and put one in one bucket and the other in the other bucket, for better or worse. I think it's going to be similar. I think it's really substantial. I'll give a view that sounds ridiculous to crypto Twitter because they are experts in this space, which is that from an outside institutional perspective, they just see crypto and they want to have a diversified portfolio of crypto assets in the same way they want a diversified portfolio of stocks and a diversified portfolio of bonds. They don't want to make a singular bet. And while I spent a lot of time explaining how Bitcoin is different from ETH and different use cases and what have you, most of the institutions are just going to say, oh, there's Bitcoin and ETH, I want them both, and I'll market cap weight them. That's going to be the dominant paradigm of just why not buy both so I can have some exposure. And again, I know that sounds ridiculous, and we're sort of in a crypto world where you have to be in one camp or the other, but institutions aren't in that world. They just want exposure. They're going to buy both. I think that's what we're going to see. The short-term price is dictated by supply and demand. And in this case, as you mentioned, there is no net new supply. And so absolutely, I think the same amount of inflows will have a larger impact on price on a market cap proportion basis for Ethereum than it did with Bitcoin, because you don't have, Bitcoin miners have to sell their Bitcoin. They have direct costs. There is no net new supply of ETH. So I absolutely think it will have a significant impact on price.
Matt explains that institutional investors often simplify the narratives around Bitcoin and Ethereum. They view Bitcoin as digital gold and Ethereum as a platform for various financial applications. While this simplification may not capture the full complexity of Ethereum's capabilities, it helps institutional investors understand the distinct roles these assets play in the market. Matt points out that Ethereum's lack of net new supply compared to Bitcoin means that similar inflows could have a more significant effect on Ethereum's price. Bitcoin miners need to sell their Bitcoin to cover costs, whereas Ethereum does not have this constant new supply pressure. As a result, the introduction of Ethereum ETF could lead to substantial price increases, further driving investor interest. Please like and subscribe my channel.